Hello, everyone. Welcome to another Mortgage Leadership Outlook. I'm Andrew Berman from Mortgage News Network, National Mortgage Professional Magazine. So excited for you to join us today. We've been doing this every day, Monday through Thursday, where we've been getting some of the biggest and brightest minds in the mortgage business, basically having them come on here, talk about what they've gone through, talk about what they're excited about, talk about what they're nervous about. We've been having some real rough conversations. So without further ado, I've got a good friend of mine that I'm going to be introducing to us today. His name is Kevin DeLory. Kevin, you with us here?
Sure am.
Okay. So besides being the best dressed man in the mortgage business, Kevin is also a guy that's been career dedicated to the mortgage broker, since the 90s, right?
That's correct.
Since the 90s, if my memory serves me correct, you were option one, kicked butt over at option one, and then went to New Century. You were like one of the top account executives over at New Century, and then a couple of things between there and now. But not too long ago, how long ago did you start with Carrington?
7.5 years.
7.5 years ago, and just as of last month, was named the Senior Vice President, National Sales, Wholesale, and Correspondent. So congratulations, Kevin. Really, really appreciate you joining us. So listen, if you can, talk to us a little bit about, I gave some generalizations about you, but talk to us a little bit about, your career in the mortgage business, and what do you love about the mortgage business?
Oddly enough, Andrew, I actually was going to school. I was going to be a history teacher, believe it or not. I fell into the mortgage business and, started off at retail, a very short time in retail. I was a retail loan officer for about a year. Just like you mentioned, I fell into option one. That, spilled over into New Century. And I spent a lot of time in the trenches. Like you said, I was one of the top account executives. I was really, trying to dig into every account I could to help every one of the brokers. And, at that time, there were some bigger players like National City. So I did a lot of business with some we called national accounts, and really learning my way up. Once the market crashed, I found a regional player that I spent some couple of years with just to try to get my bearings, get my feet underneath me. I got some great advice, and someone had said, listen, everything's secular in the mortgage industry, as we know. So find a home, and everything's going to come back around in a couple of years. Just find a home to, plant your feet for a couple of years. And then sure enough, I stumbled upon Carrington. The one thing about Carrington, I came here is because we have a experienced leadership team who gets it. I always like to tell you, if I have to tell you what it is, you don't get it and you don't have it. But they really get it. That's what the brokers, I think, like about us. We get it. So, to your point, I started off here as an account executive, regional sales manager, area vice president, now senior vice president. I was on the phone today with some brokers. So I get it. I know what it feels like to be an account executive, and I know what it feels like to be, helping that broker get that borrower through, this transaction, especially in tough times like this. They need more support than ever, more hand-holding than ever. We do everything we can to help them.
So, you hit on something there that just stuck out. So tell me about you were going to be a history teacher. So where does the wheels fall off your teaching career, and you wind up actually accidentally in mortgage banking? As a good friend of mine, and someone next to who's writes for National Mortgage Professional Magazine, also from the New England area. Christine Beckwith always says people get into the mortgage business sideways. So tell us exactly how your sideways approach from being you're going to be a history teacher to becoming a mortgage banker.
Listen, I love talking about history. The problem was talking about history to 15, 16-year-old young adults was not as much fun as I thought it would be. I deserved hazard pay. So I decided I'd rather go, talk to adults about history, and it just wasn't working out for me. Listen, my wife's a fourth grade school teacher, and I wouldn't want to trade places with her any day of the week. It's a tough job.
Wow. So now, but is there any bit of you that says, I wish, like, like when you look at her, she comes home, she's doing her lesson layout, lesson plan, where you kind of reminisce about actually the things that you were thinking about in your career that you were going to do.
With the honestly, I don't miss like, summers off or anything. I would be in this office every day if they would allow me to. I truly love what I do. I love the people I work with. I'm lucky enough to sit in a location where there's 24 of the top account executives in the company that I feed off of every day, that make me excited, that get me fired up. So I'm very lucky. I mean, I really mean that. I mean, I come in every day, the good, the bad, the ugly. I wouldn't trade it for anything.
Well, that's awesome. Fantastic. Well, I'll tell you one thing, actually, as a teacher, you're not able to afford actually those fancy suits there. That's for sure. So listen, I got to also, I'm going to call you out on this. So you got to show him the face mask. So this is how awesome Kevin's tailor is. He actually has a face mask matching his suit. How awesome is that? Tell me that's not actually the coolest face mask that you've ever seen.
Thanks, Andrew.
No problem. I had to call you out of that. That's awesome. But do you think actually that there are some skills as a teacher, that kind of work well as someone who's involved in sales? And I mean, listen, you're an educator. I mean, you're just educating about products instead of educating about history, right?
100%. I mean, I think that's one of the things that, when I was a sales leader with Carrington, I was able to get the team up and running so quick. I knew what it took, right? I had a plan. I executed that plan. No different than a teacher has a teacher's plan, right? They know they have to get through Algebra 1 to get to Algebra 2. I know I have to get through a DU approval before I can teach them manual underwriting. So we teach them all that there. And I think that as a leader in this industry, it's key. And, mapping the results, having a game plan and really educating your team on how to achieve the success they want to, get to.
Okay. That's awesome. I love that. And listen, it's what it's all about. It's all teamwork. It's all teamwork, whether you're actually teaching people history, trying to get them, through the grade to that next level, or helping that broker, hit the accomplishments that they've never been able to hit before, hit those numbers. So listen, we're going to completely switch gears here now. I want to talk a little bit about, kind of the elephant in the room. So listen, lenders have been pulling back. Lenders, have been tightening up the reins. And so, listen, as everyone's tightening up the reins, raising minimum scores. People there was at a point they were saying all government lending is going to stop, and you guys are still going crazy on FHA. Are you still going down to 500 scores?
Yes, we are.
So talk to us about how does Carrington able to do that, when all these other lenders are scared, worried about about putting any loans out there?
Well, it starts really at the top with our leadership team. They've been through the last 6 financial crises, and they've navigated through all of them. I had mentioned to you the other day, I remember when we first came up with this strategy, and it was actually first down to 550, and that was in 2015. I told you, Brian and was it Steve and Brian, Frank and Brian, they had us as Evel Knievel jumping through a fire hoop and saying we're going to crash and burn. And it was funny at the time. I remember like it was yesterday. I was sitting in the executive vice president's office of the Carrington at the time, and we said, you got to see this video that these guys made about us. This is crazy. I can't believe they're, trash talking us, like this. And I was flattered. I said, listen, this is a challenge for us, right? We'll accept the challenge. We say, you say we can't do it. We say we can, and we can do it the right way. So we haven't wavered from that. We think that there's more to a borrower than just a FICO score, and in this time, let's face it, our brokers need more product right now. The brokers that we serve, everyone's running away from them. We're running to them. We're saying, look, we can help you out. We can give you some more product that maybe you weren't using before because you were so busy with everything else. So it's been, it's in our DNA, really.
Okay, so and you and I were talking about this a little bit offline before we got started here, because listen, you have a lot of brokers that have been doing business with you, that have followed you from company to company, and now all of a sudden, your phone's ringing off the hook. Brokers actually, that said, yeah, no, we'll think about it. We'll think about it. Now we're calling you up and say, hey, listen, Kevin, what do we do? Actually, we want to get a broker package. So now, how do you actually, do you prioritize and say, listen, we have actually these group of brokers that have been doing business with us, year after year after year, that this is not their first actually a time that they did a almost 500 score FHA loan. Like, how do you deal with that? How do you deal with that kind of triage?
We try to be fair to everyone. That's the toughest part for us. It's really, how do we get through all this? One of the problems that we have today, which is kind of crazy to say it's a problem, is we're looking to add 200 people to our staff at Carrington between, Carrington centralized, Carrington wholesale. We're really looking to add bodies. We are out there right now to try to, we just added about a total of between the two centers, about 9 underwriters. So we're doing everything we can to help everyone. Obviously you always want to be, you never want to forget the people that have been with us forever. But unfortunately, it's first in, first out, because at the end of the day, it's a realtor at the end of that. It's a borrower at the end of that. I don't want to play, pick favorites to see what borrower is going to close on their home. So we really try to maintain to be upfront and honest. Here's our turn times. If you want to, use us, we'll be upfront. Hey, here's the turn times it's going to take to get through broker approval, to get through underwriting. And hopefully we can, meet your closing date as long as you work with us. So that's a tough one. Andrew, you're 100% spot on. You want to take care of the people that have taken care of you. But, at the end of the day, there's borrowers. And we don't want to, play judge and jury of who gets to, get into that new house and who doesn't.
Yeah, that makes sense. So, listen, you kind of got to play the middle ground, and treat all brokers, whether they've been doing business with you for many, many years, or they're just ready to submit their first loan and get approved. So, and how much of actually your process do you go into education? Because so I want to talk about you talk a lot about manual underwrite FHA loans. So I'm curious, actually, what do you do in terms of teaching brokers how to do that? Is it something actually that really it's something that your team is more reliant on doing that for the brokers? Talk to us a little bit about that.
Yeah, so it's twofold. It starts with the account executives, right? The account executives all have to go through a manual underwriting course. They have to be certified to offer manual underwriting. We do that internally we have a great, training, learning, and development team. And they come in and they say, you got to pass this test. It's like a badge of honor. You want to get that manual certified so you can go and offer that product. As far as, the training for our brokers, our manual underwriting course is our number one attended course. Last time we did it, the webinar, we had about 700 people on there. We talked the other day about maybe taking it, to another level. But really, it's about training, and that's what we do. We really want a broker, because it doesn't just help Carrington and help them. Maybe there's someone else out there that will do a manual. There's manuals at 640. There's manuals at 660. So it's really training them what to look for, what a manual is. There's a difference between a 550 going up and a 550 going down. And how do you identify that? So we try to give them the tools to go out there and ask their realtors for the right type of business.
Interesting. So go into a little more details about actually, the score direction, like how actually, how important is that? And where does that play actually in the underwriting process?
Yeah. So we talked about it the other day, right? Everything that's going on in the world, it's not deciding what your credit score is, if it's going to affect you, if you're going to lose your job and everything else, right? So there'll be some people that are furloughed and they'll probably have some bumps on their credit in 3 months, right? And then they're going to come back and they're going to get that credit going back in the right direction. And that's an isolated incident. So you have people that, maybe when they were in college, they, took out a JCPenney card and charged up some new clothes and they never paid it off. And, now all of a sudden the last 12 months to 18 months, they've been spotless. They got a job and, they're working their way up. And their score is, unfortunately, they're still being punished for something they did 18 months ago, right? So there's a 550 that's going this way, and soon that's 550 will be a 640 if they continue to do the right things. So that's what we look for. We don't look at the person, there's people that were 640s and decided one day, maybe they went through some tough times and they say, I can't afford to pay this, this, and this. And their payment's not going the other way, 630, 60, 90. So we're looking for the people that are going up with the FICO score, not going down, because they deserve that hand up, right?
Yep. Makes sense.
Giving them a hand up. I'll give them a hand up. Say to continue to pay everything on time. And once you do all of that, paying everything on time, we're going to get you out of that. So, there's some really, there's a big difference between a 550 going up and a 550 going down.
Yeah.
But those 550s going in the right direction, Andrew, will end up being, a year from now a 640. And everyone's going to be knocking at their door, right? Saying, how can I help you refinance?
That's great. That's fantastic. So, and I,
I'm having a problem hearing you.
Can you hear me? Hello, testing, 1, 2. Kevin, can you hear me? Testing.
Hey, Andrew, I'm hearing you.
Hey, did you just get a call by chance?
I'm having a problem hearing you, Andrew.
Hold on for a sec. Let me do this. Let me just take you out and then bring you back in. How about now? You hear me now?
I'm having a problem with the audio, Andrew.
All right, so do me a favor. You'll see actually there's a little chat box to the right. Reconnect. Can you see me? It was like this way. You'll see a. Hold on, everyone. So there's a chat box off to the side. All right, we're gonna go old school. I'm just gonna call Kevin. Pardon the interruption, everyone. I appreciate your patience. Sometimes this stuff works great. Sometimes it doesn't work so great. So, and just give us 1 second. Hey, do me a favor. Just I'd say reconnect, get out, and get back in, and then just there's a chat box on the right hand side that says private chat. So if you have any issues, you can get me in there. All right. Okay, guys. Kevin will be back in just a minute now. But in the meantime, super excited. We've got some pretty powerful people coming up later this week. So tomorrow, I believe we have Steve Schnall from Quantic Bank. He's the president over at Quantic Bank. Quantic Bank is a bank actually that has some very interesting ways to approach the ability to repay. So we're going to talk about that. There's their classification as a I forget their designation, but it's basically there is an institution that has a little more flexibility with ability to repay. And then following that up, super excited, Wednesday we've got Kevin Perenio over at PRMG. PRMG just hit $1 billion. They've been trying for a long time. They just hit $1 billion production. So we're going to celebrate with KP. That's on Wednesday. And then Thursday, we've got Ted Tozer. Ted Tozer, you might remember him. He was the president and CEO of Ginnie Mae. And he recently came out with a report that he released with the Milken Institute talking about what private labeled securities need to do to kind of self-police. Obviously, private label securities are in a weird situation because everyone's hearing forbearance, and the borrowers are calling up and saying, "I hear we don't have to pay our mortgage." So they're dealing with that because no one's reading the fine print that's saying, yes, you have to pay your mortgage, with the exception of everyone needs to pay their mortgage, but you can look at a forbearance in the case of actually the government-backed loans. And it looks like we got Kevin back. So hold on for a sec. I'm going to try bringing him back. Kevin, I'm going to bring you back. Here we go. And how about now?
Oh, there we go. Sorry about that, buddy.
No sweat, man. Not a problem. Can you hear me okay now?
Sure can.
Okay, fantastic. So, all right, listen. I want to talk to you about actually mortgage brokers. So, back to the 90s, you've been a guy that's been dedicated to the mortgage broker. Right? I mean, have you ever worked actually on the retail side? Has it always been wholesale?
I spent 11 months as a mortgage broker before I joined Option One.
And how did you like that?
I didn't mind it. It wasn't bad. The opportunity just came at the right time for me to go to Option One. But I'd like to think I did a pretty good job at it. I made, I did quite a few loans. So I understand the pain. I understand what it's like to, need every loan every month to get closed. So I get it.
But so now, talk to us a little bit about why times like this kind of make the mortgage broker model even stronger than before.
Because like we talked about the other day, it's so many more options, right? So you might have one lender for your 680 plus because they have the best pricing in town. You might have another lender that's great at conventional, right? Carrington is really a one-stop for everything. We do soup to nuts, 500 to 850, and conventional, right? So it's good to have a home. So I go to this place, and maybe they say, hey, look, you give me all your 660s, but I can't do a 580. If you're a big mortgage lender and you have just your in-house product, that's it. Game over, right?
Yeah.
As a mortgage broker, you go over to pick up the phone and call Carrington. Hey, Carrington, I have a 619. I need some help. So the options, you have so many more options than you do with that one book of business that you have internally.
That's great. Having those options, are so powerful. But a friend of mine actually said options are mortgage brokers' big superpower. And I want to ask you, because you mentioned something about actually some of the top account executives are in your office. Most of them, I'm assuming you've hired.
Yeah, absolutely. We've been together some of us been together for 20 years. So it's a good group of people.
So now, are great account executives? Can you train someone to be a great account executive, or is it just something that you either are or you aren't?
I mean, you could train you could train in product, you could train in pricing, you could train them how to do all of those things, and that's really important. It's to constantly be training, constantly educating. You have to have that desire to come in every day and go on to make sure that 4,000.1 front to back. Make sure you know the VA pamphlet front to back. For the year or so we're doing IQM, everywhere I went, I was reading these guidelines, so it was just become second nature. And then you have to have it, right? And we talk about it. I have to tell you what it is. You don't get it, you don't have it. That's just something that's internal. And I think with any good, loan officer or account executive, it's that power of it that they just have it and they know what's going on.
So you're saying so being actually the best account executive is like knowing your craft, knowing the guidelines, being an expert at it, so no one knows it better than you.
Absolutely. It's like being, you're an underwriter, account manager, processor, setup specialist, all rolled in one. You should know every step of that process so you can educate your loan officer every step of the way, right? That not that you want to hold their hand, but you want to educate them to say, if you're going to use me, this is the right way to do it. And I want you to have the best experience. And if I train you my way, you'll have the best experience.
Yeah, because something, and it's a great point. I mean, because listen, the little things like being able to go down to 500, that is a great thing to be able to do that, and that's what gets people to pay attention. But it's the skillful account executive, that knows how to put these deals together, that knows actually the guidelines better than anyone else. I think actually that's what actually makes it from someone actually who I'm just going to use on a transactional basis to someone actually I'll use even if actually the pricing is not the best, even actually if there's a couple of hiccups on the loan. And would you say that that's the case for brokers?
Absolutely. And it's training those brokers, every step of the way and holding their hand and being able to explain to them why you need a letter of explanation, why the loan was manually downgraded. So the more you could share with them and educate them, the better partner they'll be for you. Really, it's about a partnership, right? And we talked about it the other day. Even with the training, we're really shifting gears. We have a lot of great webinars we'll be working with you on as well that are going to come out and really help these brokers, whether it's a VA training on how to look at a VA manual, whether it be, like I told you about the FHA manual underwriting, and really how to use our system, because technology is key right now. Whoever's the best technology is probably going to win, right? Brokers want it to be as easy and quick as possible so they can get their borrower off the street into their new home, get them their cash out, whatever they're trying to do for them.
So technology is pretty important.
Oh, 100%. We've made leaps and bounds over the last 12 months.
Interesting. And so what is it that brokers want? Like, what do they want in terms of technology that they're demanding from the wholesale lenders?
Well, they want ease of use, right? They want to be able to upload their fees and get an LE generated. They want to be able to request the CD early in the process, because with all the oversight and all the new rules. They want to make sure they're compliant. They want to get ahead of it and make sure it's done in a timely manner. They want that CD out so it doesn't hold up their closing. They want the front end to be, easy to use and easy to price a loan so they can, have a borrower on the phone and actually quote them what the pricing will be and what they'll need for their, what they'll need for conditions for that loan.
Yeah. It's fantastic. And listen, knowing it and having actually the knowledge as the account executive is super important. So I mean, would you say actually that your account executives, do they handle more accounts or less accounts than, let's say, 10 years ago?
I would, the good ones, less accounts, right? Because they know every single person in that office and they are there to help them with every transaction. So the rate's only an issue in the absence of value, right? So if you don't have a value and you're not, educating your brokers, helping them through, be willing to explain to a realtor why, you need a VOE before closing, that's what separates the good from the okay. And I think the people that's the best account executives are able to do that, right? They're able to really hold their hand and walk them through the transaction and help that broker. And then in turn, that broker's loyal to them and knows that they're there for them no matter what. So does a quarter really matter if I'm going to get my borrower to a closing table in 15 days and make it easy and impress that realtor, or 30 days and get an extra quarter in, rebate?
Yeah.
Or credit, sorry.
Yeah, no, I was thinking actually, oh, this is great. Rates is only an issue. Say that again. I want to make sure I catch.
Rates only an issue in the absence of a value, right? So our value is,
yeah. I was thinking that would be good for the thumbnail, but something, I don't want you to be known as actually because it almost sounds like actually like they're a nice person. When someone says, "Hey, is it good? Are they good looking?" and like, "Oh, they're a nice person." It almost sounds like, "Hey, they got low rates." No, actually, there's lots of value there. And how would you say, Carrington is in terms of rating and being competitive in the marketplace?
Listen, we're very competitive where we need to be, and we're very competitive. Actually, not so much where we need to be. We know who we are, right?
Yeah.
We're in the market we're in. There's a lot of high touches on these below 640 borrowers and manuals. It's not an easy loan. We've made it, not that we made it look easy, but we get it. We know how to do them. I've talked to you the other day. I mean, just looking at our compare ratio alone, I was so much lower than people that won't go below 640. But there's a lot more, not always a lot more conditions. It's more explaining. It's telling the story of that loan. Because like I said to you, it's more about, there's more to a borrower than just a credit score. You don't know what happened. If it was a one-time life event, you got to ask the questions. And I think that's what, our account executives bring to the table. They're able to educate these loan officers on what you should be asking for, what a manual underwriting looks like. And even with our training that we do, we give them training that will not just help them with Carrington, but will help them in their craft. It will help them in their own broker shop. That's
great. So I mean, you mentioned compare ratio. I got a company that goes down to 500. What is your compare ratio, if you don't mind sharing?
I haven't looked at it in a little bit, but I can tell you last time we were lower than 6 competitors that they drew the line at 640. I don't want to say their names, but it will just tell you that we know what we're doing, right? We got a servicing team behind us that knows exactly what they're doing. They get that there's more to a borrower than just a credit score. So we're able to handle that borrower. And again, it's not just people look at it and say, "Oh, it's a 540. It must be horrible credit. It must be this." No, that person just might have went through something 2 years ago that we've all gone through in our life, but didn't need a mortgage in 18 months, right? So, it's asking the story and doing the right things. And I feel the reason we keep that compare ratio so low is because we do the right loans for the right people.
That's great. I think it's that story is where you're going to get that connection. It's that story is actually where the question about rate just gets thrown out the window when you can have actually someone giving their real reason why they're doing this, why they're getting a house, why it's a dream for them to be able to be the first generation in their house to own a home or whatever the reason is. If you can get to that story, and you're a little bit higher in rate, then no one's going to care.
Right, and I'll tell you, Andrew, most of those people that they're so happy that somebody believed in them and gave them that loan, right? And especially if you're a broker, you go to them and you get them in there at that 589, and they pay that mortgage on time, and 10 months, you're calling them back and saying, now they're 660 and everyone's knocking on their door, right? Who are they going to be loyal to? They're going to be loyal to that broker that came to them when they were 580 and gave them the hand. Then all of a sudden they're 680 and everyone's blowing their phone up saying, hey, I want to refinance you because they did the right thing. So, the brokers there is an advantage to being that guy that did the 589. Come 9 months down the road, a year down the road.
That's awesome. Fantastic. All right. Where did my daughter just get Starbucks from? That's what I want to know. Jeez. All right. Listen, Kevin, I really, really appreciate you taking the time actually to meet with us today. Someone wants to get a hold of you. What's the best way to get a hold of you?
Now let's go right to Carrington Wholesale. Like I told you before, I'm a leader who likes to get in the trenches. My personal cell phone number's on that website. My email's on that website. I don't hide it. It's right there. If you go to leadership, see the first person there, you see is Kevin DeLory. I'm more than accessible to anyone that needs help.
Fantastic. Listen, I wish you good luck in the future, but you don't need luck. You're doing amazing. You guys doing great. Congratulations on the new promotion. And, super excited about seeing some of the cool things that you guys doing, helping brokers understand actually the importance of manual underwrite, the training resources that you guys do from all the webinars. Obviously, we love it when you do the webinars with us, but, just actually all the resources that you guys put out there, not just with us, just the educational resources. Whether you're doing business with Carrington or you're thinking about doing business, make sure you connect with Kevin and make sure you connect with Carrington. All right.
Thank you so much, Andrew.
All right. Thank you so much. Just stick around for a second. I'm just going to take everyone else out of here. All right. Again, everyone, thank you for joining us for another Mortgage Leadership Outlook. We do these every day, Monday through Friday, at 4 p.m. East Coast time, 1 o'clock Pacific time. Like I said, tomorrow, really, really excited. Tomorrow, we have Steve Schnall from Quantic Bank, the president of Quantic Bank. Some unbelievable products that you're not going to believe actually are still able to be done, but because of actually their special designation as an institution, because they're also a bank taking deposits at their depository locations, they've got some things that they're able to do that no one else is able to do. So join us tomorrow. Stephen Schnall is going to be on, and then later on this week, got Kevin Perenio, KP from PRMG. Hopefully you know him from his amazing YouTube videos, and if not, you'll get a chance to connect with KP on Wednesday. Wrapping up the week, we got Ted Tozer, the former CEO and president of Ginnie Mae, is going to talk to us a little bit about what a report that he did with the Milken Institute, talking about actually how private labeled securities can self-regulate to prevent actually things getting really, really ugly in that space. So again, everyone, thank you for joining us. We really, really appreciate it. And I'm Andrew Berman from the Mortgage News Network and National Mortgage Professional Magazine. Thank you for watching.